Welcome to the Stefan Levira podcast.
Welcome, podcast listeners. My guest today is Patri Friedman. Thanks for coming on, Patri.
Thanks for having me.
Patri, just from researching about you, you are the MD of Zarko Investment Group, and obviously you're also well known for your involvement with the seasteading movement. Now, you had some interesting discussion on Bitcoin recently, and I thought it would be great to get you on the show. So the first topic was around Bitcoin maximalism. Now, I know you're not necessarily a maximalist yourself, but maybe you can just outline a little bit of your thoughts on Bitcoin.
Yeah, definitely. I think that, Bitcoin maximalism is people who kind of believe that Bitcoin is going to have all of the value and that all of these other tokens and attempts to form new money are going to fail. And I somewhat believe that. I think that one of the many problems I see in the crypto sector is that everybody's trying to replace Bitcoin rather than to build the next thing. And I don't think it's for good reasons. I think that we don't need very many forms of money. We probably need multiple forms of money. For example, privacy coins versus Bitcoin. But we don't need 1,000 forms of money. And that the types of new crypto technologies that are going to succeed are going to be doing other use cases besides money. And I think Bitcoin does money really well. And part of this is the question of token price. That is, I think that I kind of believe in the monetarist model for valuing tokens, MV equals PQ and things related to that. And for Bitcoin as store of value, if people are holding their money in something, it has low velocity and it has high token price. And so I think that, I think that Bitcoin could be unseated someday. It does have an incredibly strong community. It has great technology, but someone else might be able to make a better Bitcoin. But what I think is that there will be few cryptocurrencies that are used as money. Those cryptocurrencies will have a high price because people are holding their assets in them. And all of the other tokens will not be used for money and will have a low price because of the velocity problem.
Right. Yeah. I think obviously that there's a few points where I might slightly disagree, but I think we're broadly aligned. Now, one thing in terms of tokens is the question on whether it's a monetary token or whether, people talk about other forms of tokens, like maybe tokens representing, real estate and whatever. And that kind of discussion is slightly different because in that case, those tokens aren't trying to be money.
Absolutely.
Yeah.
And that's great. It's great when they're not trying to be money. And I think that all the tokens are trying to be money for two big reasons. One is they're just copying the first thing that worked. They're copying the first use case, Bitcoin, instead of making the next use case, which is, a lazy thing to do that doesn't usually work. And the second thing is that the model of like, how do you value capture? How do you make money? And how do you raise money in advance is so clear. Okay, we pre-sell this token that we think is going to be money and have a higher price. It's clear how we're going to make money. It's clear how the people who buy it are going to make money. It's just very simple. And again, it's just lazy because if you are not doing the store of value use case, which almost everybody should not be doing, you need to find some other reason why your token will be valuable or some other way to raise money besides selling a token. And that's harder, but I think it's what you actually need to do to make a good project.
Right. Yeah. So they've got to just put in the work. Okay. And I think that is the next angle that I wanted to discuss, and this is something you've spoken of, is this Bitcoin agorism, or working the agoric angle. So you commented recently that, cryptocurrency now and the general, kind of industry, if you want to call it that, has interesting parallels with the dotcom bubble, where the hype outsprinted the reality. And yet, despite all the frauds and the failures of the internet bubble, the internet really did change everything. So you comment about this idea of markets eating the world. What do you think that looks like?
Yeah, all right. So there's a lot to unpack here. I mean, starting with the dot-com bubble, I think that there's a lot of really obvious parallels where people said, "Wow, this technology is gonna change the world." They saw its potential before it was kind of built out and able to do it, and lots of capital poured in. Lots of that capital was malinvested. There was a bubble, and that bubble popped. But 20 years later, the internet has changed our lives more than the hypiest hype in 1998. Like it's everywhere. Our mobile phones always connected. It's taken over more of the world, and one aspect of that is Mark Andreessen's famous line, "Software will eat the world." And this idea that software is so general that you can apply it to everything. There's like almost no part of life. I think about like gardening. Okay, gardening is just this random thing that I picked, but I'm sure the software could tell me like which of my plants need more or less water, or with sensors analyze the nutrients that they're getting from the soil. And like, is gardening a place that like most needs software? No. But like, can you improve with software? Yeah. And so you can improve everything. And so the number of businesses that were spawned and are continuing to be created is just massive as it transforms every area of our life. And I think that there's potential for crypto to be similar, but not by having 1,000 new money. It's not. That's why I don't like the term cryptocurrency, because I don't think that these technologies are going to change our lives because we've got like 1,000 different tokens. That's like having 1,000 different like gift cards that only work at one store. What I think is that it's about crypto as an agoric technology. And this term comes from Mark Miller and Eric Drexler's Agoric Papers, which was written, I believe, in 1988. So this is some real OG stuff that I recommend listeners read, where they, I think it was the first place that smart contracts, for example, not by that name, but as what were called promises, were referenced. And I think Eric Drexler's mostly been working on nanotechnology, and Mark Miller is very humble. And I think that this early work has not gotten as much attention as it deserves. But I mean, this is 1988, and they were writing about essentially like distributed economic networks for bidding for computational resources and smart contracts and things like that. And the agoric angle is the idea that crypto is a set of technologies that makes it easier for us to have markets, makes it easier for us to transact. And it's about drawing the line between past technologies and crypto, not from like not from PayPal, for example, and being like, oh yeah, it's about payments, it's about money, but drawing a line from Craigslist and eBay and Uber and Airbnb. All of these are systems or businesses that take a resource like hotel rooms or taxis that are currently in an opaque, illiquid, informal, disorganized market, and they, in a sense, tokenize it. They bring it into a formal two-sided network, with rules and reliability. And it turns out that creates a ton of value if you take something and make a good market where there was not a market before. And so what I see the suite of crypto technologies as doing is helping markets to eat the world. That there's just so many different places in life where we have disorganized, illiquid economic resources that haven't been standardized and aren't being well matched up between buyers and sellers. And that, like software eating the world, this is something that can be done 1,000 times. Like you can make 1,000 different companies that are finding different resources and making them into markets. And that this is a direction that I see crypto going, not making 1,000 kinds of new money.
Yeah, that's an interesting way to put it. And I think one parallel people can draw is, say, when people compared Uber to the taxi market, but that's actually not necessarily the best comparison, because in some cases, it's not that Uber was just straight competing with taxis, but in some cases, Uber expanded the market. More people now took that form of transport than taxis serve. So in a similar way, some of these other opportunities where, say, people build online services, but using Bitcoin as the money, then there's a way for them to kind of create a new market and so to grow the pie, so to speak.
Yeah, absolutely. I mean, when you make the friction of transacting lower, by bringing people together into a market where you can see offerings from, many different sellers, and you don't have to go to a different place for each one, you get lower transaction costs, then people transact more. Absolutely.
Excellent. Okay. And so Do you see any potential industries that you think this might happen first?
I think, well, I mean, we can see people working on it for like storage space, bandwidth, access to the internet, some of these basic utilities. But I would say like the big one is real estate, and to a lesser degree, securities, all stocks and bonds and things like that have these formal rules that could be turned into smart contracts and operate on these old inefficient markets. But I think real estate is, it's so big. It's the majority of global wealth, and often, as we know from, for example, Hernando de Soto's work, in a lot of countries, property title is very messy and poorly stored, and you got to go through some boxes of papers in the back of some local office. And I don't think that crypto like solves that problem. You still have to figure out who has title to things in order to put it on the blockchain. However, like as we're able to put real estate title on the blockchain, I think that'll be huge. Because I mean, just look at first off, it's just the biggest asset class, and if you look at the friction, I mean, for residential here, you're probably talking about 3 to 5% in transaction fees to buy or sell a house, and and maybe less for commercial. But we're still talking about on the order of several percent. And when you're moving around, big value things, that's a lot of friction. So I think that we're going to see real estate get rapidly tokenized, and then you're going to be able to see, real estate investment funds that are like constantly rebalancing their portfolios algorithmically. You're going to see people slice and dice so that, for example, one party gets the stream of rents and somebody else gets the capital gains from appreciation of the property, and then much more exotic things that I can't even think of right now. And probably some of those things will probably be stupid and lead to some people losing some money. But in general, kind of formalizing this like massive market where most of our wealth is, I think it's going to be huge.
Yeah, agreed. I think as once we consider the timeline of things, so I think it's more like once we kind of get the sound money down, then then people will start learning to build on top of that, and that's when we can start to see some of this innovation, rather than kind of in the current world where people are just trying to create their own token and basically scam people and earn what we might call an almost unethical seigniorage income. Now, with all the scammers in the space, do you have any thoughts on ways to identify scammers or problems in their pitch or project?
Well, I mean, rule one is like no ICOs, and that's not quite true. I participated in Tezos because I knew the founders, and I'm sure lots of people made money by getting into ICOs and then selling them quickly. But a lot of what I look at is what's the incentive structure for the founders. And so part of the problem with ICOs is they're often raising what in venture capital we'd consider to be like multiple rounds. You have a line that's like Series D money for seed stage ideas. So they're raising multiple rounds of money on a very early stage prototype, and then with little or no vesting or lockup, meaning that they can sell their tokens right away and turn it into cash. And Peter Thiel has a great line about this in 0 to 1 about how cash is kind of like the worst form of compensation in startups. It's like the least incentive aligned between the employee or founder or investor and the startup, because you're getting paid no matter how the startup does. And tokens that you can sell right away are kind of like that. Not completely, because often the initial token market is pretty thin, and the founders are only able to sell so many of their tokens without crashing the price. But in general, I think that equity is a good design, and that tokens are a cool design for being tokens, but they're a really poor design for investing in a company. And so I tend to make equity investments, and of course, hold some Bitcoin and Ethereum and Tezos. So yeah, not buying tokens, buying equity, and of course, looking at for scammers, you just want to be verifying that whoever you're giving the money to is going to have to spend that money on development, that's monitored. They're not going to be able to just cash out. And then the question of figuring out, what's a good project is, well, that's much more complicated. That, you have to have an opinion about the whole space and how it's going to evolve and where this project fits in. One rule of thumb I would give is that I see a lot of projects that seem to depend on like a future level of blockchain technology that is not actually built and working yet. And, that's a problem. Like you need to be building a company now based on what works now or what will work soon, and not your hope for what this could be in 5 years.
That's a good point around people basically hyping blockchain dreams that don't exist yet. And in some cases, it might be easier to sort of sell that lie because, well, it's not actually a real product, and they can basically say it has features that don't exist yet, and that can almost be part of the pitch or the draw for people. Now, I think the other thing that's interesting is around making the regulatory rules work with, in a Bitcoin world. I'm particularly interested in this concept of jurisdictional competition as countries compete for Bitcoin talent and resources. Do you have any thoughts on whether this process will lead to lower taxes, favorable regulation?
Yeah, I mean, that's a really interesting question. So, like my friend Vijay Boyapati, for example, a Bitcoin maximalist and early Bitcoin holder, he thinks that it will reduce taxes. That basically by moving to sound money outside government control takes away the government's ability to inflate the money supply. But I'm more skeptical. I think that inflation is something that a lot of us don't like because it's inelegant, it's inefficient, and it is theft to us. But I think that like low, steady inflation rates, it's not stealing that much, and that doesn't make it right. But in terms of the how much value is gained by making it go away, I don't think is that great. And I think that Bitcoin, for example, it's not like how we used to imagine eCash systems 20 years ago, in the days of Cryptonomicon and the sovereign individual, where it was just going to be like totally anonymous and like you'd have all these transactions the government can't track, right? Instead, we got Bitcoin, the fully transparent ledger, and even privacy coins right now are not that private, like Zcash and Monero. Like the technology needs to get not way better, but like a little bit better. We need things like the coin join, where not every node sees the entire transaction set, to have something more like a private mixer system. And I think that once privacy coins are really secure, then governments are going to like crack down and make it hard to use them. So I think the governments will always be able to tax like the physical nexus, and they'll just get their taxes that way. But I definitely think that there will be influence. I think that, we're already seeing countries get interested in making more crypto-friendly jurisdictions. We're seeing countries try to upgrade their government systems, by putting them on the blockchain. Estonia, for example, is a leader of this, and there's a number of South Pacific island nations that are hiring crypto consultants and working to make their countries run on a bunch of crypto technologies, which is really cool. So I definitely think that we're seeing jurisdictional competition to adopt these technologies and to host people who are using them. And I have an article coming out in the Spectator imminently about the intersection between crypto and the whole startup countries seasteading movement that I helped start, where I think that like governance in crypto evolves much, much faster than on land because, it's just code. The law is code. And because there's not, a bunch of people with guns saying you can't do it. Instead, you've got this world of easy entry. Anybody can create a new crypto network, easy exit. You can cash out, easy to switch between them. And so we're getting all of these governance experiments just happening at, 100 times the rate that they did on land. It's amazing. And I think people are going to get used to that as crypto networks become more and more of our economy. People are going to get used to these networks having like well thought out governance that's way ahead of what we use on land. And especially as people get rich from these crypto networks and get used to seeing them be an improvement in their daily life, they're not going to take for an answer anymore, oh yeah, this, vote once every 4 years is the best way to run a government. They're just going to see that that's not true, and they're going to insist on their terrestrial government starting to catch up with their virtual governance. So I think that in the medium term, long term, there's going to be, a really great pressure that will help transform terrestrial governments.
Interesting answer. Okay. Yeah, there's a few points I guess we've got to unpack. One of which is just around the inflation aspect. I guess from an Austrian point of view, the inflation argument is not just the 2% inflation, but rather the malinvestment, which, from the Austrian view, causes that boom and bust cycle. So I suppose in an Austrian view, it actually is pretty bad. But
I agree that it's not just the theft, but it's also where the money is injected, causing malinvestment. I don't agree that that's the entire explanation for the business cycle, but I definitely agree that the government manipulation of interest rates and where they insert the money causes price distortion. I totally agree with that.
Yeah, right. And then I think the other thing is just around with, online communities. Sometimes I sort of struggle to see where virtual governance would really play out. I think of it more like people might just, buy things online and use Bitcoin where they are not able to, spend money some other way. So, historically, being able to donate to WikiLeaks where you could not do that before, or being able to buy, let's say Alex Jones has got shut down, so people want to buy, his products or whatever using Bitcoin. And I think the other thing with that is around just enabling exchanges between people. So as an example, in the past, people might have had a plumber come over and they might have said, oh, hey, if you pay me in cash, they'd kind of do that deal under the table and they might offer a discount. Maybe in the future, people might do things like have a Bitcoin or Lightning, use for that payment and then say, hey, I'll give you a discount for that. Do you see an incentive or a trend that might happen in that case?
Yeah, I mean, it definitely could happen. I don't see any reason why it would be different from a cash discount. I mean, do keep in mind that Bitcoin is not anonymous, and so the cash discount is it's partly to avoid credit card processing fees and all of that, but it's also partly to not pay taxes on the cash. And it's not clear whether not paying taxes on cryptocurrencies is going to work or not. But yeah, I definitely think that adoption should be driven by use. And that's one of the problems that we have right now, because the technology is early and it's got all of this excitement and all of this investment, is that, the price of most tokens is based on speculation and not actual use. And people are just guessing at the use cases. And that's really dangerous, because then, you get the technology and the businesses are disconnected from, how they'll actually be systems of value generation. And that, having tradespeople actually, using this as a form of payment because it's better. I mean, for example, I talked with an investor in the Philippines recently who was involved in a company that offers banking services via ATMs, where they support the traditional banking system and they also support crypto, both Bitcoin and Ethereum, and they made their own kind of internal stablecoin representing the national fiat currency, so that people could transact in that in a cryptographically secure way without having the price fluctuations. And this idea of like, oh, it's services for the unbanked will be one use case. It's easy to say that, but here's a place where people actually did it, where they actually were like, hey, I need to pay you $100. I'm going to do it with this system and give you a piece of paper that has a code on it, that you can go and make your own account on this crypto network with, or turn into money or whatever. I can send it to you through my mobile phone. And like, where people are actually using these technologies to transact because it's cheaper, because they were unbanked. And I think it's just really important to get this stuff actually used and to see how it's actually used and not just be guessing.
Yeah, that's an interesting parallel back to the dot-com days where people would value things on very absurd metrics as opposed to just the kind of cold hard revenue numbers. Okay, so how about institutional reform and building new governance zones? One interesting idea that I've seen you speak about is this concept of law as technology. And this idea with seasteading, that it may start with things like ships for medical tourism and, then progressing to designs based on oil rigs, for example. Do you want to comment a little bit on where these kinds of ideas are at today?
Yeah, definitely. And one thing I'll say about the sort of anarcho-capitalism component of this law as technology is it's important here that there's sort of two strains of anarcho-capitalism. There's the Rothbardian, where he sort of believed that there was an obvious, correct, axiomatically derivable system of laws, and that we would have competing courts and enforcement providers, all private, who were enforcing that. And to contrast this with my dad's flavor of anarcho-capitalism, where the system is discovering the laws, and where providers are competing not just on enforcement and arbitration, but on actually what set of laws they provide to their customers, and that essentially you're creating this market for a legal package, and that market is discovering new and better laws. And I'm not just because he's my dad, but I'm 1,000% on that side, where if you look at, for example, law and economics, which analyzes like what laws are the most efficient and actually has a theoretical model for like what the best laws are. The best laws actually depend on and by best, I mean like total monetary value for all individuals in the system. That the best laws actually depend on the cost of detecting crimes and enforcing judgments, because the proper, we wouldn't want to spend $1 million preventing $100 crime. That's a net loss. And if you think about it from the justice morality perspective, like that $100 crime is wrong, you won't get it. But efficient law says, we should pay if paying will prevent, more crime than the amount that we pay. And so that actually depends on things like, how good are alarm systems, like the actual cost of detecting crimes and punishing them plays in. And then another area is like we're constantly having new technology that requires new laws. And it's nice to be like, oh, well, we can always reason by analogy from, old concepts of property to new things like intellectual property. But the truth is that new technologies have different aspects that can't always just be analogized or reasoned from first principles, that we're going to have to try different laws and see what works. So this is kind of unpacking that law as technology, where I think that laws are complex and evolving, and that there's something that is discovered, not derived. And so new governance zones has been my passion now for almost 20 years, believing that we need startup countries. This kind of comes from, looking at why do countries not work very well? Why is there no country that I think has a good government? Well, the problem is not a lack of good ideas for new governments. I mean, look, my dad's got anarcho-capitalism. Like, this is a really neat idea for a government that could work way better. And lots of other people believe in it too. Okay, well, why don't we have it? Oh, because there's no place that you can go and make a new country. And so I started reading about micronations and about ocean cities and about secession movements, and realizing that what we needed was a startup sector for government. And I started out looking at the ocean because it's kind of the next frontier, and it has some physical characteristics. The fact that you can reshuffle buildings and move entire cities, I think, would lead to more competition and more efficient law. But it's also it's the frontier. It's next. It's what's open. Over time, I'll say that I've gotten to think that maybe it's going to happen on land first. It's obviously just cheaper and easier to build on land. And, initially I thought that countries would not go for these governance zones. But now, 20 years later, we're seeing a bunch of countries like Honduras being interested in it, or French Polynesia, which has a non-binding MOU to host a seastead. So I think that it could happen on land first, but that the ocean still is the best potential for the long term and the biggest ones. For seasteading, there's basically three different designs. You can do ships. Ships are great from a legal perspective. They actually have kind of a virtual governance system already, where you can register your ship with any country. You fly their flag, and you're under their legal system. I wouldn't quite say under their laws, because countries enforce different laws on the ships than on their territory. For example, if you're on a Bahamas flagged cruise ship, you can have a doctor who's gone to any accredited medical school in the world. Whereas if you are a doctor in the Bahamas and you haven't gone to a Bahamas medical school, you have to go before a board and present all of your education, your credentials, and they can decide whether you can work there or not. So that's one thing that's really neat, is it's already got this cool system for franchising sovereignty, which is exactly what we want. But ships have really high operational costs, and kind of moving around all the time seems in practice to be more of a cost than a benefit. And then you have designs that are similar to floating houses, and these designs work any place that you don't have waves. For example, in French Polynesia, we're looking at building inside the reef or inside an atoll, and there you can do these just kind of simple floating platforms that are very easy to build on. And then the third type of design is more like an oil rig. This is your deep ocean seastead. Maybe free floating, maybe anchored to a seamount. These are very expensive, but obviously can handle the biggest waves. And then there's some other options. For example, there's an area called the doldrums near the equator where there aren't very many waves, and so you wouldn't need huge pillars. I have an idea for a circular breakwater design where you'd get an economy of scale in building the breakwater, and it would create basically an artificial atoll inside, and then you'd be able to do these easier floating home-like structures.
Okay, fantastic. And then how far is the technology away for some of these examples?
I would say that it's not so much the technology as the kind of first off, getting agreements with countries, and then actually growing these communities that the farther out in the ocean is just harsh and expensive and needs scale. And we're not going to build a floating city until we've built a floating village, and we're not going to build a startup city state until we've built a startup semi-autonomous village and grown it from there. And so what I'm seeing, now finally, after advocating for this stuff for 20 years, is enough entrepreneurs who are sold on this idea, and investors who believe in it, and countries who are excited about this as a way of helping their people, of helping economic development in their country, especially smaller countries. There's something that I call commoditizing sovereignty that I've been pushing for 20 years and hoping would be a trend, where if you look, for example, at Tonga selling the .to domain name, or countries selling passports or special stamps, where small countries realize that their sovereignty is itself a valuable resource that they could take advantage of by selling, that we're really seeing that kind of continue and accelerate. And so there is interest. There is not one of these yet, but I think that there will be in the next few years, and that there's really starting to be a pipeline of these projects that are going to start. They're going to start small. They're not going to have anything like full sovereignty, but they're going to have significant autonomy to make meaningfully different laws. One organization I'm involved with, I'm on the board of the Startup Societies Foundation, and we recently got a generous grant to develop a dashboard of these projects, both historical and current, and we're developing a handbook. So how to do a startup society. This is something I've written about a lot for seasteading, actually. So we published a seasteading book, which is mostly stories about the people who are in the movement, like me. But what I'd written was much more of like a how-to guide. And I wrote a seasteading book a long time ago, 15 years ago, that was also more of a how-to guide. So I'm really excited to contribute to this book and kind of have there be a way. I mean, it's not easy. It's not that anybody's just going to be able to start a new society. It involves like convincing your government to let you do a zone with different laws, which is not easy, and you need to put together a successful real estate development. But I think it's actually starting to be possible to start these, and I think that in the next decade we might finally get the kind of explosion of zones with different laws that I've been hoping for.
Right. And you mentioned around this concept of countries taking advantage of their sovereignty and, making use of that. Now, I guess the question I have is just around what's the risk then that governments say, okay, guys, you can have this area, but then pull the rug out from under you later?
Yeah, I mean, it's always been the biggest concern of investors in these projects. I think that I don't think it's as big a concern because there are ways of enforcing deals on sovereigns. So, for example, there's an international agreement that most countries have signed where you can enforce arbitration agreements. Again, like 120 countries have agreed to enforce arbitration agreements against any country. So if you have a contract with a country and they break it and you obtain a ruling in your favor in international arbitration, all of that country's assets outside the country can be, or in any of the member countries can be seized to pay that judgment. And this is because if you're an oil company or a gas company, you're scared of the same thing. Like we have seen these resources get nationalized in the past, and so countries have found mechanisms for for protecting themselves for big amounts of money. So that's one way. You can get the country to post a bond, and you can be popular with the people. There's a lot of different ways to protect yourself against that kind of thing. I won't say it's no worry at all. Like there are various ways that a country could shift the laws over time or do things that are in their control and not technically violating the contract because they don't like you, and that's something to worry about. And it's definitely one of the advantages of seasteads over charter cities. Even though they're more expensive, your capital is more protected if you can pull up and move your buildings to a different jurisdiction. And so I do worry somewhat about big investments in charter cities, which are kind of trapped in place, but there's a lot of ways to mitigate that.
Yeah, interesting thoughts. Yeah, I like the concept you were mentioning around if it's popular with the people of that area. Let's say they've it's an economic zone and there's a whole bunch of new jobs and everyone's becoming much richer. Well, then it might be so long as it works out that way, then it might be much more difficult for that host nation or country to now try and pull the rug and walk all the changes back.
Absolutely. And it's good for every reason. The greatest challenge for these projects so far has been, people, especially of a leftist persuasion, especially in the first world and not in this country, portraying them as being somehow neo-colonialistic or exploitative or foreigners taking advantage of these people. When in actuality, it's a country saying, hey, please come help us develop our country. Please come help provide jobs for our people, which, ought to be exactly what left-wing people want. But, somehow their brains are broken on this topic. And so, I think part of the solution is just, making that bond with the local community as strong as possible, working with them from the very beginning, listening to their needs and hearing what they want for the project. Making sure naturally these projects are going to have some expatriates coming and living there, helping provide the capital and the experience. but they also need to have a lot of locals and be providing jobs for the locals, and just building that strong relationship, that partnership, that can withstand these attacks and smears from people who don't even live there and don't have the problem of needing a factory job and having that be a huge improvement in their life, and don't understand that for most of the world it is a huge improvement in their life.
Okay, and I thought we would just sort of start to wind up and talk about some of your thoughts on, back to Bitcoin. Have you got any discussion, or do you know what the thoughts of your father, David, are on Bitcoin?
Yeah, I mean, he has not gotten into the technical details like I have, or the differences between the different tokens. He has he's been paid Ethereum for some of his talks, and he's certainly interested in them. And I mean, he actually, so he was into these digital cash projects before I was. He was loosely involved with the cypherpunks back in the 90s. His anarcho-capitalist work was cited by Tim May, who wrote the Cypherpunk Manifesto, as an influence. And Tim May said that to some degree, anarcho-capitalism was an influence on the design of early systems, and influenced Bitcoin's design, because online kind of is an anarchic system where you need to have self-enforcing agreements, and that's what the whole Bitcoin design is, a distributed self-enforcing agreement with no central authority that, obviously has deep connections to anarchist theory. And so I think my dad is excited about it. He's interested in it. But he just hasn't gotten deep in the details. His focus these days is studying legal systems that are very different from ours. He's got a new book they can read online for free that he's working on about that, which I think is really interesting from an agorist perspective, that our ideas about what kinds of laws you can have is limited by what we see around us and what we can imagine. And actually, we have thousands of years where people have tried a bunch of really different laws, and that we should be drawing from those for ideas for our new legal systems.
Yeah, fantastic. I mean, when I was much younger, I read The Machinery of Freedom, and I thought that was a fantastic book on, anarcho-capitalism. And I think, still to this day is a great example of introduction to some of these ideas. Okay, and how about your grandfather, Milton? What would he have thought about Bitcoin, and would he see it as a reliable e-cash, as he predicted, I think it was around 1999?
I think he would have been interested in Bitcoin. Obviously, he was a monetarist economist. In fact, MV equals PQ was his license plate for a long time. The government only offered a dash, and so he would have a little piece of electric tape to turn the dash into an equals on his license plate, which is totally illegal, but nobody cares about. And so I think he would have been really interested in the monetary dynamics of it. I think he probably would have said that it's not e-cash for two reasons. One is the transparency. A key quality of cash is that it's not traceable. That's one of the things that makes, it's an anonymous bearer instrument. And so I think he would have said that Bitcoin is not e-cash because it's traceable. And then the other thing is the high transaction costs. Again, handing somebody cash is extremely low transaction costs, and Bitcoin is proving to be more of a sound money, and sound money that can be used as the settlement layer, for larger transactions. But it's just it's not really, the technology does not seem to be well suited right now for being a payment system, although obviously things like Lightning built on top of it. And there are lots of other ways to do payment systems, with Bitcoin as the ultimate sound money settlement layer. So I absolutely think that it's coming, but I think he would not see it as e-cash for that reason. But not because he's skeptical of the technology or the possibility, just because it does not yet have those cash-like qualities. But a privacy coin with low transaction costs, and really good privacy, which I think we'll have, in the next couple of years, I think he would see as a reliable eCash.
Yeah, fantastic. Okay, and then how about in terms of your own thoughts from as you mentioned, privacy technology? I'm not sure how closely you follow some of the Bitcoin development, but there has been some work on things like coin joins and other ways of breaking the heuristics that chain analysis companies will use to try to make it traceable. And obviously, as you mentioned, Lightning Network. Do you have any thoughts around the privacy and the Lightning Network development in Bitcoin?
Yeah, a little bit. I mean, honestly, I'm not able to follow all the aspects of blockchain technology, but both plasma channels and like coin mixing are things that I happen to be interesting and have read up about. So, I think Lightning Network, which is a form of plasma channel, it just absolutely makes sense, right? If you've got your, cryptography lets you prove that a series of transactions happened. Doesn't have to happen on chain. You can batch them up, and that's just obviously a good thing. And then CoinJoin, I think that having there be a transaction with multiple inputs and multiple outputs is like obviously a great way to obscure. Especially if you add something like Chalmian mixing in, where I create my transaction and it involves breaking my payment up into many different pieces that then travel through many different intermediary accounts before reaching their final destination. I think there is like a basic problem with the early CoinJoin stuff I've seen where like, okay, the network or the recorded blockchain does not know how to map the inputs to the outputs. But if you imagine, like, how does that transaction get formed? It gets formed by people saying, I want to pay this much from this account to this account and sending it in, and then some nodes combining all of that into a transaction. Well, you're still revealing to the validators what the individual transactions are, and they could be recording that someplace other than the blockchain. So I know that there's some proposed systems where essentially imagine like a tree graph where as a set of people, like as two set of people come into a transaction, they send it to a node. The node like combines that into a combined transaction before sending it to another node. And so at the end, when you've created this large joined transaction, it's not that every node knows what all the possible inputs and outputs were, but only the node that I sent mine to knows like me and three other people what the specifics are. But, assuming that they don't pass that information on, nobody else knows. And so we're limiting who has that information about the inputs and outputs. So I think something like that, maybe with like onion routing mixing systems, if you like really need privacy, I think that is a great way to create these privacy coins. Like, I think that it's not, I worry about like scaling, and like I follow like Vitalik's Ethereum work on scaling and sharding chains. Like there seems to be a lot more theoretical difficulty there. I feel like anonymizing, like we have some pretty good ideas about what to do. And, I'm a big fan of Zcash, for example. I think they're doing great at like steadily increasing their anonymity. So I think that it's very solvable and will be solved in the next few years.
Okay, excellent. All right, so listeners, if you want to find Patri, you can find him online. His website is patrifriedman.com, and his Twitter account is at Patrissimo. Have you got any final or closing thoughts that you'd like the listeners to know, or anywhere else that you'd like them to find you?
I'd say that Twitter's the best place right now, and I think this is a really exciting time to be an agorist, or to be a believer in sound money, or to be interested in better ways of transacting. We have to be careful not to let our excitement get ahead of us in terms of how we spend our time and money on projects that aren't ready yet. But like, what an exciting time to live, like where the world is being. It's kind of like being a geek in the 90s. I was using computers in middle school, but they weren't cool yet. They weren't making people billions of dollars and changing the world. And I watched, over the course of the 90s and 2000s, suddenly this set of skills that had made you like unpopular as a kid is like transforming the world, and is the power that gets you money and gets you to run businesses. And it seems like we could be having something similar happen now for people who understand monetary economics and decentralized trustless systems, which is us, which is anarcho-capitalists and agorists. If crypto networks, if markets eat the world, then that means that the world's economic systems are going to be reshaped into a form that's much more like the stuff we study, that's more like what we like and what we're into. And that's, it's already has made a number of sound money believers really, really rich. And if it continues to grow, it's gonna keep doing that. And, man, that's exciting, right? When I was a kid, I would not have dreamed of a world where, like, when I'm 50 years old, it's like the computer nerds and the Austrians who are rich and powerful because of how the world went. Like, I would never have dreamed of that, but like, it's happening. Like, the first part's already happened. The second part's starting to happen. That's pretty exciting.
Oh, absolutely. Yeah, it is a fascinating time to be alive. All right. Well, thank you very much. It's been a very fascinating conversation, Patri. Thanks for coming on.
Yeah, thanks for having me.
So that was my conversation with Patri Friedman. Obviously, there are some areas where, if you're a regular listener of mine, you'll know I disagreed on certain points. Obviously, I'm not as into Ethereum. I take a more sound money-centric view. Patri and I might disagree on things like the application of the velocity of money theory. But this comes to differences in our economic view from a Misesian and Rothbardian influenced view versus the Friedmanite monetarist view. But my intention with this interview was not to have a debate on economics, but rather to focus on points where Patri and I agree. So despite our differences, I found Patri offers a very intelligent point of view on various things such as Bitcoin and crypto eating the world as agoric technology. This concept of law as technology and competitive law. It was interesting as well how he discussed the Friedmanite conception of anarcho-capitalism, where the system is deciding on the laws. It was also a really interesting discussion on jurisdictional competition and the ability to enforce agreements against sovereigns or to influence their behavior in the direction of liberty, which I think is a novel insight. It was also really cool to get some insider perspective on what his father David Friedman thinks on Bitcoin and crypto, and also his late grandfather Milton Friedman and what Milton might have thought on Bitcoin. Anyway, let me know your thoughts. Subscribe to the podcast by searching Stefan Livera Podcast, find my website stefanlivera.com, and find me on Twitter @StefanLivera. That's it from me, and speak to you next time.